Good afternoon, happy Friday, I should say good evening. Here is your weekly mortgage rate update. And yes, I'll get back on the weekly part. Mortgage News Daily 30-year fixed average today is 6.06% APR. Yes, you heard that correctly, 6.06% APR. That is down from last Friday, which was at 6.20% APR. And now the big question is, why the sudden move? So the big move happened late yesterday afternoon in the bond trading. So let me explain what's going on, why that happens, and why the move showed up. So Fannie Mae and Freddie Mac, right, the two big purchasers of mortgages in the United States, they are currently what's called a quasi-governmental corporation. When they say it's quasi, that's because Fannie and Freddie are publicly traded companies, just like Microsoft, Google, anything else, so you can buy stock in them. However, they have to report to Congress. And all this happened back in the Great Recession, 2008. They needed to put rules around what was happening with them and the mortgage fallout, and also allows the government to infuse money to them if they need to at the time, right? Just in case they needed a bailout. There's been a couple of years they've been talking about making Fannie and Freddie go back to completely public traded companies, get away from Congress. And the reason this has been talked about is because the two companies are very flush. They have a lot of money, big reserves. So what happened yesterday was Trump came out and said that they are going to allow Fannie and Freddie to purchase $200 billion in mortgage-backed securities. Why? In an instrument such as a bond, when you buy, the price goes up, and inversely, the interest rate goes down. That's just how the equation of how you calculate interest in the bond. That's how the equation works mathematic-wise. There's no magic. There's nothing. That's just the equation. Price goes up, interest rate goes down, and reversely, price goes down, interest goes up. So if you want the interest of a bond to go lower, you purchase more of it. So what's going to happen is, and it hasn't happened yet, this is just Trump coming out yesterday, late afternoon, merely saying that he's going to allow them to do this. In the anticipation of that, right, they know that when they buy those bonds, the mortgage-backed securities, the interest rate is going to go down because they're going to purchase quite a bit, $200 billion worth. Why is this a great thing for the mortgage market, and why is this a fairly smart move on Trump's part? So obviously you see the knee-jerk reaction. That's the best part for mortgages. Why this is a fairly smart move on Trump's part is because he is circumventing the Federal Reserve and the Treasury, right? We all know that he is not happy with the Federal Reserve and their reluctancy to lower interest rates. This way, the Fed doesn't have to buy the mortgage-backed securities, which they do. They have bought several. Their balance sheet is fairly heavy on mortgage-backed securities. They're selling them off. The Treasury's not involved. And so therefore, this is a way for President Trump to control mortgage rates. So that's the knee-jerk reaction. That's what happened yesterday, late afternoon. When the trading opened today, it was at the levels, the price was at the levels of where it spiked up to after the announcement yesterday. And so therefore this morning you saw a large drop in the interest rates of mortgages because mortgage-backed securities went from 6.06% APR from the Mortgage News Daily down to the 6.20% APR on the Mortgage News Daily. So that is the reason for the large move. What happened today? Rest of the day, there were some interesting economic news that came out. The non-farm payrolls came in way under what was the consensus. So, and also on top of that, the past 2 months, the non-farm payrolls number was reduced. So therefore, it is still signaling a very, very poor labor market. Now, if you read the news, you also see that the unemployment rate dropped, which doesn't make sense if non-farm payrolls are going down and people aren't getting hired. Why would the unemployment rate drop? The unemployment rate is, for lack of a better term, a survey. It is not backed up by actual data, or the majority of it is backed up by actual data. It's just a survey from the Labor Department. Non-farm payrolls, however, that is an actual number that they call, and people, companies feed into that number. So, quite the interesting situation coming up, to say the least. So let's look forward. What's happening next week? You do have an inflation number come out. CPI comes out on Tuesday, which will be the biggest information that comes out next week. I'm sure there'll still be some wash coming out about any geopolitical things that happens with this announcement of this large purchase that Fannie and Freddie are going to do. So we'll see how that goes. But there we go. President Trump has figured out a way to circumvent the Fed to lower interest rates, at least mortgage rates at this time. So have a great weekend. Again, Happy New Year. Congratulations to the Bobcats. Don't forget tomorrow there is a parade downtown for their championship win. Still no snow. You need to do your snow dance. If you're not doing your snow dance, skiers are really sad. So you don't want to make us sad. So get out there and do your dance. I'm Ryan. Have a great weekend. Talk to you soon.